Pete Forbes is joining us, data scientist at Arbor Research. Pete, great to have you back on the show. You've always got a bunch of great charts. Let's get right into it. On the top line for housing, the one you start with is the inventory situation, which looks like it continues to be depleted.
Good morning, Oliver, and thanks for having me on again. Yes, I think the inventory story is the heart of what's happening in the housing market and the heart of what's really an extraordinary operating condition for home builders to take advantage of in the months ahead. Looking at Redfin data, we've got a nice set of metro areas to take a really granular look at the market, and we see that inventory is down over 29% year over year. This is a pretty stunning drop coming from a couple of different directions, but that scarce supply is what's really starting to affect sales, what's really starting to affect prices, and what's all really wrapped up in this sort of shifting consumer preferences related to the virus.
So how much of this, I'm kind of going straight into the macro takeaway. I know we've got some more details here on the nitty gritty housing stuff, but if inventories are playing such a big role, how much is the price stability in a housing or the demand to be trusted as a macro sign? I mean, even if there's limited inventory, the fact that people are still buying them and the new home sales pickup that we've seen is fairly compelling, right? Does it still look healthy?
Yes, and I think from an economic growth standpoint, that's where the new home construction is really important. So the underlying economic activity is definitely happening, and that's good for the economy. That home construction is pretty resilient in terms of social distancing and other concerns is a positive for that economic activity. But I think you're also right that there is a baseline expectation that we're going to see higher prices because of the lower supply. And so you need to work that into where, are higher prices really signaling a burst of, extra strong economic activity? No, not necessarily. So we have to build that into that expectation, and really also the expectation that existing home sales will remain low simply because of the inventory constraint.
Okay, so inventory constraint, definitely a big part of this. What does it show up for, though, in terms of the pricing? Does that mean that prices are high because there's few options out there, that we can retain that demand? Is there an incentive by home builders then to pull back? I mean, how is this all factoring in to whether or not there's going to be a pickup really in new homes coming to market, home builders doing well, et cetera?
Well, I think the incentives for them to keep building are absolutely there. They've got demand from the customers. We have low rates, and we have this new shift in this work from home, work from anywhere type of environment for a lot of companies and a lot of employees that don't necessarily need to live in high-cost metro areas. So there's going to be an increase in mobility. There's going to be a move from less to toward less density, toward greater amenities. And so I think that is a scenario where home builders are well positioned to take advantage of that shifting demand to move where they're focusing their businesses and acquiring new properties and react to the way that customers want new features like built-in offices or areas where their families can do work from home or school from home. But also in the sense for the consumer, I think even for the sellers, you're also starting to see them react to this inventory situation as well. We're beginning to see list prices move higher year over year, recovering from when we saw a few hiccups during the lockdown. We're also beginning to see actual sales prices start to tick higher, and a little less evenly than we see with list prices. There's a little more optimism on behalf of the sellers. But I think what you're really seeing here is people are starting to become aware of, in their neighborhood and in the places where they're looking, there are fewer properties for sale, and that is even motivating them to act a little bit quicker. So here you can see in the chart, we have list prices up 8.3% year over year for the median metro area, sales prices up 5.1% year over year, but not quite following in lockstep.
That chart made me do a double take. The median list price, really the highest it's been on an annual change basis for the last almost 4 years, but the actual price at which the home goes out is still lagging. Should we expect the orange line to close with the blue higher?
I think on a broad level, yes, but I think you'll find an uneven recovery in terms of areas that have higher density, some of the states that may have higher or more persistent spread. But there are definitely going to be areas where sales prices do follow higher simply because we have motivated buyers a lot of able buyers with low rates, and people looking to make a change after spending several months, frankly, looking at their own house in their own yard and wishing they had something else to, going on.
Okay, so this is basically an issue of the kind of gap between those two, possibly closing from one direction or the other. Maybe the list prices are just out of line right now and have to come in a little bit. Would be one way for that to change. A chart that you also have within this kind of same area is the median year-over-year growth in the share of new homes that are sold almost immediately. So this too a function of inventory being light, plus the demand side. What does this lead you to conclude in terms of the likely direction for prices? Even though there's low demand, it seems like that last chart is still a little bit problematic, that big difference. But this one relative to inventory suggests, hey, maybe the prices can stay where they are. So I'm not sure what to take away from this, Peter.
Well, I think what you have is, sort of a combination of the pent-up demand. People had their eye on homes, but they weren't able to necessarily complete the transaction. As we look through sort of the actual process of purchasing a home, as you went through April and even May, there were some points where the business was really still figuring out how to make those transactions work in a social distancing fashion. We were getting used to selling homes online, virtual tours, all of these tools that they've put together for buyers and sellers to be able to speed up that transaction. And I think almost like you've seen with auto sales, where dealers kind of figured out how to work with customers in a way that made sense, the real estate industry is making those same adjustments, and that may be compressing this time frame for sales to some extent. But I think the really big part of the story is that you have motivated and able buyers with the means to improve their home situation, and they are trying to take advantage.
Yeah. So right now, this is still a pretty good sign of demand. I mean, it's hard to find something more expensive on your budget than a house. And
Yes.
Apparently they're ready to gobble them up pretty quickly. What does that mean about the previous trend of home improvement? Is that kind of pulling back here in favor of actual house purchases, or do the two go hand in hand?
That's going to be an interesting story to watch going forward, because I think the home improvement story with the global home improvement boom that we've seen as everyone was cooped up at home, but also receiving some form of economic stimulus. A lot of that money, a lot of that extra time at home went into a list of projects they wanted to tackle. I think now we're starting to see in Google search evidence, both around the world and especially in the US, some of those explosions of search interest in do-it-yourself activities and other home improvements have really started to wane. And I think a lot of that has to do with the uncertainty over whether or not the extra stimulus, the unemployment compensation that we've seen extended for a lot of people is going to go away. And so to the extent that that support will leave, I think the home improvement scene is more exposed, and the home construction scene can still benefit from what's going to be a smaller and maybe a little bit different mix of customers, but one that could definitely sustain home construction through the rest of the building season and even into the winter.
Peter, one more before I let you go. The delistings chart you have is pretty interesting, because while we're waxing pretty positively here about the overall situation, what about this one as you see potential sellers retreat a little bit? On the one hand, it looks like it's picking up, but I see just kind of the way it normally goes about throughout the year. It doesn't look like anything alarming yet. So these are coded by the month, and as we can see, it's picking up a little bit here. But in terms of comparing to previous years, it doesn't look very alarming yet.
No, I think it reflects what you should really expect to see, given the amount of job loss and job uncertainty we've had, and also just frankly the uncertainty about a lot of the higher density areas where people have had to pull listings just because there aren't interested buyers right now. Not all areas will be equal in terms of participating in this rebound, but I think this does, the delisting story is one where it's not very alarming, but it is interesting to see that we're already sort of at the end of season pace when people are pulling listings that didn't go anywhere and they want to take it off the market for the winter. Maybe that's what some sellers are doing, just to see if they can gauge what's happening a little bit later. But I think the rebound, and on median, we're back to only 9% lower year over year. That is driven in part by this bump in prices and the idea that, maybe it's worth taking a shot because inventory is low and people are looking around their neighborhood seeing houses getting snapped up.
Peter, great stuff as always. Fantastic
Thank you, Oliver.
charts.
Great to talk to you.
Thank you, sir. Appreciate the walkthrough here in detail. Pete Forbes joining us from Data Arbor. Go and check out the Twitter feed. They post a lot of good stuff. Pete is a data scientist at Arbor Research.